Good morning, ladies and gentlemen. Well, quite an improvement on the week. The risk dial is up at 38, and the big news is that we are in monthly risk on, which you can see from the scoreboard. On Friday we kicked into SPY on the monthlies and sold out TLT. The daily model is also very close to giving a buy signal for adding more equities. It's only at minus 1.62, so chances are Tuesday or Wednesday at the latest we are in risk on the daily model, while the weekly model probably has 1 to 2 more weeks to go if things continue in this way. But the monthly model, as you can see, kicked in on Friday, and we are likely to have a good period of risk on with quite a few whips, I would have thought. If we look at the deviations, we can actually see that the top of the red line comes in at 298.31, which is somewhere around 29.90 to 3,000, and you'll see why that level is so important in SPX. If we look down at the other sectors, the one that I think is most interesting is probably not XLU, but the one which has most potential, and we will see why later, is actually IWM, which I now would have thought probably can go and test the top of this Bollinger Band, which comes in at 160.60. So another 2% here, while there is only about another percentage point to go in SPX. But we'll see all that later. And on a fundamental basis, you can see that this 29.90 to 3,000 area is actually the time 17 Blue Angel, which is slowly ascending. So I would have thought any move through there is likely to be retraced, and quite sharply. We will see how next week is actually a very pivotal week, because not only do we have the panic buying that will happen at the beginning of the week, but we will also have NFP, non-farm payroll, on Friday during a sort of shortened holiday session, and that could prove to be really volatile and very important for all asset classes. If we start off with the 2-year note, well, we know what's going to happen at the start. We're going to go probably straight to 187, 188 as a result of the Trump-C meeting. If we break that, 193 to 194 is almost assured. And that is probably a wonderful level to get long or futures looking for NFP, because if NFP is weak, all hell's going to break loose to the downside again, and we'll probably make new lows. If we have a look at what the Bollinger Bands show on top, you would have thought you'll see that this is the top of the daily Bollinger Band there at around 193, 194, and that's going to be a beautiful level to get long again. If NFP is very strong, well then we are going to go round, straight to 206. I see no alternative to that. So it's going to be a very volatile week. 193 to 194 is my favorite target, and the target where I want to have some a larger position in the 2-year. I still think that at the end of the day, the world economy is weak, and that the US economy is bound to follow it sooner and later, and that is when the Fed steps in and starts doing a lot of easing. The market is absolutely bound to take back almost 20 basis points of forecast easing in July. It is now going to start taking down the probabilities of a July cut to almost zero. Certainly if NFP is strong, but if NFP is weak again, the probabilities go back up to 100%, and then in the autumn, I think that the probabilities of a 50 basis point cut at one of the meetings in early autumn are probably very high indeed. I'm not even going to show you a chart of the bonds because it's a meaningless chart. It could go anywhere. But what I am going to show you is this minus 245 basis point level of bond yield against the 10-year note. If we see that level next week, and we probably will, that's my forecast, it is going to be a really good level to a really good risk reward level to put on long 10-year note and short bonds. We will see what happens. If it goes straight through it after NFP, then the dollar is going to reverse course in a lot. But to me, this could be easily an inverse head and shoulders with a move back to the neckline, which you would expect. So the risk reward is to buy the 10-year and sell the bond at minus 245 and see what happens into NFP. As far as the 5-year note is concerned, well, you can see what is likely to happen. We're likely to go straight to 187, 188, and then probably to 193, 194. That is going to be a wonderful level to buy futures ahead of NFP. But if NFP is strong, we're going to go straight back up to 213, and 213 becomes then the pivotal level. So I don't expect that. I expect NFP to be meh to weak, and I expect this kind of area 193 plus 194 to hold, and then for the 5-year note to reverse course after the NFP, but it all depends on NFP. At least we have our levels where the risk reward is good. In the 10-year note, straight, I would have thought we go straight to 207, something like that, and then possibly here to 216, 217. If we see 216, 217, it's going to be very, very good risk reward to get long on futures there. But if NFP is strong, 222, 228 is where we are going without a doubt. That kind of level, and the yield curve will flatten, and that is not going to be good for financials. It's not going to be good for XLF, but that is what I'm looking for at the moment. Really, this kind of level, 217 before NFP, is going to be very good risk reward. I also want to show you a weekly chart of TLT. To me, the very, very important level is 127.37, and I think if we trade below 132.08 on Monday, which I think we will, odds are that we go to 127.7, to this 127.37 level. Odds are, which basically means that over the course of the next few weeks, after various retracements in the short term, you are likely to have overall a consistent period of risk on, which basically means that even though the bond market retraces after weak NFP, you are likely to have an abandonment of TLT positions. Now, what does that mean? That means that the yield curve is going to do really funny things over the short term, and TLT in the end could start discounting the fact that the Fed will succeed in reflating the economy. So even though NFP might come out weak and we might make a lot of money on 2-year positions, the curve might steepen to such a degree, but that is 3-4 steps ahead. What we are really looking for at the moment is what is going to happen between now and NFP, and then what the risk rewards are for NFP. But I want to make you aware that even if NFP is very weak, the real move might be in the curve as opposed to in all the contracts. So the curve is not going to come down all points the same. Some points, like the 30-year, might actually start going up in yield. So it's very, very important where you are positioned on the yield curve. Well, we know what's going to happen on Monday, don't we? We're going to go all the way up to the top of the Bollinger Bands, 29.93. This was classic action. It came down to the moving average, tested it, closed right on top of it. Next morning, open higher, never looked back. Knew it was going to happen one way or the other. It was either going to come all the way down to 28.80 or start going up again. Up again is where we're going. I doubt very much that we stop before we've seen the 29.90 level where the daily Bollinger Bands come in. And funnily enough, that is exactly where the weekly Bollinger Bands are going to come in, 29.85. It'll be a little bit higher because it's a new week, but it won't be higher than 29.90, I would have thought. So we have the daily and the weekly Bollinger Bands right up there. And this is the monthly chart, and guess what? The Bollinger Bands at the moment 29.80, but they will be slightly higher, i.e. 29.90 to 3,000. So we have everything, the daily, the weekly, the monthly Bollinger Bands. The market might spike the Bollinger Bands, but it's not going to stay through it. We're going to have some nasty reactions which we'll be able to buy. So above 29.90, especially before NFP, it's buy puts time. In NQ, the comparative levels are actually all the same. 79.75 to 8,000 is the daily, the weekly, and the monthly Bollinger Bands. So basically, ES and NQ are still trading in lockstep, which basically means that you should avoid NQ because there's no point taking on more risk for the same reward. The one which is far more interesting at the moment is actually now the rut, because we're going to break 1571, and that is actually going to give us 1602 straight away, and we don't have any daily, weekly or monthly Bollinger Bands to worry about. I would have thought it's almost a cinch that if you buy anything above 1571, you will be able to sell it around 1600 below and before NFP. It should be that kind of a quick market that you can make some money out of it. For everything I've been saying, we have confirmation basically coming from the VIX. We still have this open gap from when our friend Trump tweeted over the weekend, and that gap comes in around 12.85 to 13. The market is going to head straight to 13, consolidate there, wait for NFP. If NFP is strong, then probably we go all the way down to the bottom Bollinger Band around 11. It's going to be very hard for the market to sustain 11. And if it's a bad NFP and the economy truly is weakening, we're going to go straight up to 1810. So it's going to be a pivotal week, simply because everything is coming in together. People are going to be whipped out of all kinds of positions on Monday, Tuesday, Wednesday. Then they will be on holiday on Thursday, and Friday is going to be a thin day, and people might just panic both ways. So a very pivotal week coming up with lots of trading opportunities. It's nice to see that everything is more or less confirmed by DAX. Here we are, 12,650 to 12,750. Those are the levels which I think are so important, and I think there is absolutely no chance that we break them on the first attempt. So this actually tells me that yes, the market is going to be strong. The States is going to go up to close to 3,000, fail, come back. And then you'll have a better chance to buy it, because in the end, I think that the States cannot stay strong if you have a TLT which doesn't support it. So it's not a case of risk on or risk off, it's a case of both of them staying stronger together. To me, all this that I've seen in equities says that you're supposed to buy them back up into the 3,000 level or just below, and then transfer your position from longs into calls, because it's not going to be sustained. Well, what about the dollar? It's been doing nothing wrong, has it? It's staying below 96.47. It's basically just opening the Bollinger Bands. I would have thought that now we are likely to stop everyone out and go up to 96.70 and retest the bottom of the 200-day moving average here in mauve, which is going to be really the place that I expect we will be sometime before NFP. And then we see. Basically, we're going to correct all the daily anomalies, stop everyone out above 96.50, and just levitate there, waiting for NFP to come out. If NFP is weak, I think we make new lows in the dollar. And that is going to be probably the big trade. I'm going to probably double up on puts around this 96.70 level in the DXY. What does that give us in Euro USD? Well, I am always looking at this line 114.84. To me, that is the most important swing level, and the fact that we haven't been able to go above it, to me, is telling that we will see some weakness. We will see the weakness back to this kind of level, 112.55, 112.75. That is the level where we should coincide with that just above 96.70 in the DXY, and that is where you want to have another stab at going long Euro USD. But this time, on this next wave, if I'm correct and that's the bottom, you really want to see it break 114.84, because if it doesn't break it, then we are in for a long period of trading sideways. Of course, that is a view which is confirmed by gold. And what are we going to get here? Well, I would have thought we test at the very least 113.70. To me, that level is very likely to be touched at some stage next week, and that is where the risk reward is best for long gold positions. 113.70 long gold, and then we'll see how far it goes, because at least you know where to put your stop. You can put your stop even in 150, because you know that it's going to go all the way down to 1307, 1320, that kind of area, because there's no support from there all the way down to these kind of 1300, 1320 levels. So that is why it's so pivotal, and that is a very, very good level, 1370, to get some calls on board. So on to our biases for next week. I have basically written what I think. Nothing fundamentally has changed, just the market sentiment. People are now going to start speculating that the trade war is over and everything's going to be wonderful. Excuse me. That is absolutely unlikely to happen. Just because some talks are going to restart in December, this is classic can kicking. The real test here is NFP, because if the real economy is weak, and as I think it is by all the indicators that I'm seeing, the data, the Fed will react to the data and not to Trump bluster. I've written down all the levels that I've just mentioned in 2-year notes, in 5s and 10s. Be careful of TLT. You could easily see this yield curve steepen out of sight, or conversely, you could see it, if NFP is very strong, you could see a huge amount of volatility in the curve before it settles down. I still think in the end it steepens, but I've been wrong before. In the Bund and Bobble, I said this 245 basis points against the 10-year note is going to be very important and a great risk reward. SPX 2990s is, as far as I'm supposed, prepared to buy it. I'm still not prepared to touch NQ, although I've given you the levels where the Bollinger Bands are. And in both, being long of the market above those levels is really, really stupid. Transfer your position into calls if you've got to have it. The rut, finally, is the one that I think, it's the one that I have liked the most all the time and actually has given me the least reward. But I think in terms of percentage points is the one that can go up to 1602 and then possibly 1624. So risk reward wise, I still like it. Now VX, I've showed you how this 13 to 1310 level is going to be all important. Do not get caught short volatility below there. If you can have your transfer of outrights into calls when volatility is 1310 and the SPX is around the 2990 level, that is going to be a great trade, great risk reward. Do it. European equities, I've told you, and DXY, we're likely to test 9670, which is the 200-day MA, and I've given you the same levels, which should be so important in Euro USD. Now, just a quick word, be careful, because the likelihood of everyone getting whipped like crazy is very high. I am definitely going to put on some positions at those good risk reward levels in 2s, 5s, 10s, and also in equities. Thank you very much indeed, and tweet you on Monday.